Futures, my man, made about 77.9k today. Held the trade for around like 2 hours, right? So quick little intraday trade. So far, 100% win rate on futures, right? Not too shabby. Live trading futures today. Man, I am good. I am warming up, guys. Like, wait until I take over the futures trading industry. I've already took over the forex trading industry. And now it's starting to take over the futures industry, and then followed by stocks, followed by crypto, followed by options, and I'll eventually be the king of the retail trading industry. I aspire to be the guy where one day professional traders will watch. Like hedge fund traders will be watching my videos one day, right? Is it a big dream? Who knows, right? Who knows? I'm already making more money than some of these professional traders, right? Come on, man. Anyways, yo, professional traders, if you're actually watching this, please reach out to me because I really love you guys, man. I learn a lot of you guys and I have so much respect on what you do. But if you're watching this, I love you. So during my last live trading session with the 1% Club students, which I had yesterday, I told them that I'm waiting for NQ to actually get to this point of interest. In fact, let me just pop the recording right here. Now, I really want to drive home the concept of how the fact that whatever we teach here applies to all asset classes, not just for forex, but also for crypto, for stocks, for options, and for futures as well. Like I said, regardless of whether you trade forex, crypto, or whatever, right? Because market mechanics is simply universal. It's just the rules that govern each asset class that is different, right? So I'm going to show you guys how you can apply this on futures as well, right? So first of all, they'll say nice face cap, hashtag explore, yeah. Bad hair day today, so gotta wear a cap. But yeah, man, like this is a new cap that I got. Pretty nice, huh? So like I said, guys, the main thing you want to take away from this is really my analysis, how I look at charts from top to bottom, right? So you can apply this across all asset classes, be it forex, futures, crypto, options, stocks, or whatever tiny little niche that you like to gamble in. So first of all, let's look at NQ. So when I look at NQ just like this, the first and most obvious thing that I see is like this bullish break of structure, right? So we know that price is potentially up at its all-time high right now, right? You can see price is around like 25,000 level, right? But this is kind of like useless to us, right? Like what can this tell us? Because this is where the market is at right now, which is why we want to focus on what price is currently doing right now. We want to identify what's the internal range that we should be paying attention to. And if that's the case, I'm just going to continue observing the structure, and you can see we got a goes up, pulls back, goes up, pulls back, and then eventually broke structural, right? So this is the most relevant structural break that we want to pay attention to. And that is where I want to define my swing range, right? So if I go down to the 4 hour, then you will be able to identify like this is the lowest point that led to the break of structural, which means that this is actually the swing low, right? So this is our 4 hour swing low right there. It's also a strong low since it led to a break of structural, and then later on it led to price creating like a swing high right here when it starts pulling back, right? So that should always be the first step, and that is to really map out like the swing range that you want to focus on, right? So once you map out the swing range, everything becomes like much more easier. It doesn't give you 100% clarity, but at least now you got a place to start, right? So if we look at this right now, and we see that this is the swing structure, which means whatever that's in between this swing low and swing high is pretty much the internal structural. You'll see that price goes up, pulls back, goes up, pulls back, goes up, pulls back, goes up, pulls back, right? So all of this is just the internal structure creating higher highs and higher lows, right? So if we look at the last internal range, you will see that this is the most valid internal breakout structure, the most recent one. I wouldn't really classify this as internal breakout structure because this is more of like a fractal breakout structure, which means that this is the last 4 hour internal low, which also means that this is the last 4 hour internal high. And the 4 hour internal high is the same as the 4 hour internal low, right? So once again, the reason why I keep on doing this at the start of each currency, at the start of each asset class when I actually analyze a blank chart is because of the fact that I want to just narrow my focus to like what price is doing right now, right? And I just want to like focus on one tight range. So I keep on doing like a top-down approach, going from the swing structure, the swing range, then identify the internal range, and then so on and so forth. So now that we have identified the internal range, I know that this is where we are playing within, right? So if what I can do over here is I can also mark up the point of interest that led to this break of structure, which is obviously this demand right here, which price has mitigated recently. Price mitigated the demand, started pushing up, right? Obviously. Okay, So you can see on the 1 hour time frame, we saw that price have started shifting bearish recently to start pulling back, right? This is just price shifting bearish to start pulling back. It doesn't mean that price is going to be shifting bearish on the higher time frame. All it tells us is that price is potentially coming down here and taking out the last fractal higher low that we have seen on the 4 hour time frame, which on a 1 hour time frame is actually the last internal higher low, right? Or even like swing low, if depending on what you look at it. But basically, price came down, take out that last higher low that we have right here, giving us like a fractal market shift, which signal to us that the pullback is going to happen. Okay, so when that happens, pullback start happening, and where did price pull back to? Obviously, it pulled back to this last areas of demand that we have on the left hand side that led to this internal breakout structure. Not only that, why is this zone so special? And why did price actually respect this zone? Because if you look at what happened on Monday, the 15th of September, like somewhere around here, when the market actually opened, right, there's like this huge gap being formed right here, right? What is this gap? Well, this is imbalance, right? This is potentially institutions buying before the market opens and cause price to actually come all the way up here, right? Which is why price tends to come down, fill up the imbalance, or aka the gap, before it actually push up. Which means this is the first time institutions actually came in to look for longs. This is the second time they came in to scale into their long positions. And this is the third time where they are scaling into their existing long position, which is exactly why when price actually come down and mitigate this zone right here, it respected it and just goes up. Right? And when you can see, this is the internal structure. We have shifted bearish, which to signal to us that price is putting back to this demand zone. And then over here, price started consolidating a little bit. And then later on, it came up there and take out this high here, right? Which means that the pullback is over. And right now, we could potentially hit up even higher. Right, so classic market structure, nothing too confusing or complicated in here. If you apply the mechanical rules that we teach here inside the mechanical market structural course module, you should be able to do whatever I've just done right there, right? It's not magic. So later on, price came up here and actually took out the last strong high right here, right? The last internal lower high, which give us once again a market shift, which signal to us that price is potentially finish pulling back and price is potentially going to come up there and take out the all-time high, right? So right now I'm looking to play the continuation, all right? I'm looking to play this move right here. If that's the case, where should I look for longs? Well, what is the internal range that we have on the 1 hour time frame? This is the low that led to this fractal market shift. This is the high that started pulling back, right, after the fractal market shift. You can see, we pretty much just narrow our focus from this to just this. And here's the fun part. I'm going to narrow my focus even further when I go down to the 15-minute time frame, right? Because this is still quite large. Because if I look at this, I don't know where exactly am I going to enter from, right? I don't know exactly at what price point, at what time should I be entering for longs, which is why you want to make sure that you've developed your bias on the higher time frame first, right? After doing a top-down analysis. So after doing my top-down analysis, I found out that the pullback is over, and right now price has shifted bullish, right? The internal structure is actually bullish right now, and it's in alignment with the higher time frame bullish structure, which means that I want to look for longs. Now the question becomes, where do I look for longs, right? Where is the optimum entry point? Well, you look for the zone that led to this fractal market shift. So we always go from the extreme, right? So this is the extreme zone, extreme demand zone that led to the fractal market shift. This is not the ideal zone because after all, price did mitigate it, right? Go into the 50% or even like the 80% of the zone, mitigate it before it started like pumping up, right? So this zone has been completely mitigated. So it's not the most effective zone that we can have to work on, right? Next, price goes up, right? What do we have? We actually have like a supply that we have right here on the left-hand side. Now, when we have this supply, the reason why we mark this up is because we want to spot some form of failed reaction. We want to find some form of flip zone, right? So price pretty much went up there, mitigated that supply right there, comes down, creating like a failed reaction, and then started consolidating right here, building up some liquidity before price try to break past the supply again, but failed to do so again, right? Because the supply here is still quite decently strong. Comes down, sweep the liquidity below these lows right here, below these equal lows, before you actually push all the way up here. Now, this is not just a failed reaction. This is a failed reaction that swept liquidity. And once again, this tells us that this is the next price point, the most recent price point where institutions actually scale in for their long position. Remember what we have identified earlier. This is the first time, this is the second time, this is the third time, right? When you actually create like this V-shaped reaction, and this right here is the fourth time. Which means that the next time price actually come down here, there's a very high chance that price is going to respect this zone, this flip plus sweep zone, this point of interest that swept liquidity, this demand zone that created a lot of imbalance, a lot of bullish momentum just like this. It's going to respect it and it's going to get a bounce. And that is where we want to enter upon, right? That is the price point that we want to enter on, which means we do nothing until that gets mitigated, right? So you can see all of this is clear because I've done my top-down analysis, right? Because I've done my preparation. That is why I can came to like this conclusion, or rather like a hypothesis, right? So this is pretty much, let me just like mark it up, to make it more clear for you guys. So failed reaction comes down, build some available liquidity in the form of equal lows right here, inducing retail traders to actually enter for long position early, placing the stop loss below these lows, giving us liquidity. Later on price comes down, swap the liquidity, and then push up and break structural, right? So this is that liquidity sweep right there. Oops. Right there. And then this is the entire flip plus sweep zone, right? You can, if you use the range method, right, you will draw this entire range as your flip plus sweep zone. If you use the pivot method, you would just draw like this pivot candle as the flip plus sweep zone itself, right? So that, my friend, is your 1 hour flip zone, right? So 1 hour flip zone, just like that. So now let's go down to the 15-minute time frame, right? Because we have kind of identified the point of interest that we want to enter upon. And if you go down to the 15-minute time frame, you can see once again, this was the continuation, right? This was formed after the pullback is over. And right now, we know that price doesn't go up forever. Eventually, as the pullback, right, grab some fuel in terms of liquidity before it can continue up. That is exactly why price started shifting bearish on the internal structure on the lower time frame right here to facilitate the pullback. And where's it going to get the fuel? This right here. This flip plus sweep zone, right? Which means price is going to continue collapsing. It's going to continue collapsing until it mitigate the flip plus sweep zone that we have down here, right? Then it can start shifting upwards. Or rather, the more it goes down, right? The more it goes down even further, the higher the probability of it shifting bullish again. Right. So if that's the case, once again, this is the refined flip plus sweep zone. And then you can also draw this entire thing as your entire consolidation, like flip plus sweep zone, right? They marked up based on the consolidation method, right? So until price actually tap into this zone, you shouldn't be looking for longs, which means if price is like over here doing whatever, you shouldn't be looking for longs, right? Because if you do so, you're just entering too early, right? And you're going to end up becoming the liquidity, right? Which is why you're much better off just waiting for price to mitigate the flip plus sweep zone. So right now, we have price pulling back, okay? How do we know price is gonna finish pulling back? Well, I need to wait for this internal structure to start shifting bullish. And that only comes after some form of liquidity swing, right? So I wanna see price coming into my flip plus sweep zone that we have right here, either like the white one or the refined one, whatever it is. Once it comes down into these zones, show me my entry model in terms of maybe you can have some form of inducements being built up during the pullback phase, wait for the inducement to be swept, and then we actually enter somewhere around here if you are aggressive. And then if you are conservative, you can wait for the market shift to signal to you that the pullback is over, and then look to play the move to the upside, right? So that's pretty much the gist of it. So right now price is just pulling back, which is why if you want to take high property setups, you're much better off just waiting for price to come down into this point of interest right here, this institutional point of interest, which is the flip plus sweep zone. Wait for it to build some available liquidity, or even wait for like the liquidity that we have on the left hand side to get swept before you actually look for longs. And if I look at this right now, the only available liquidity that I see is potentially like below this low right here, right? Below this low here. And actually I will also classify this as liquidity. Look at all this. This is a classic trend line right here. So this is also liquidity. Right now, my hypothesis is that price is going to use all the available liquidity that we have right here to cause price to pull back even deeper, even further. And then once it come down to like this refined zone that we have marked up right here, it's potentially going to mitigate it and start shifting bullish. Or if there isn't sufficient liquidity, if there isn't sufficient demand right here, what can potentially happen is that price can come down even further, sweep some liquidity that we have below this low right here that is formed during the continuation, right, before it actually move to the upside. And by then, we should have some form of pull inducements being swept as well, right? So that's pretty much my analysis for NQ. All I'm doing right now is just waiting for price to come to my flip plus sweep zone. I personally think that it's going to come down to the refined zone, right? But remember, the market can do anything it wants at any time, right? So, yeah, but I'm just going to be waiting for price to come into this zone. So now that you have understood my full analysis for NQ, you will know exactly why I'm just waiting very patiently for price to get down into this point of interest. Once price get down to this point of interest, gonna immediately start looking for longs, right? Just gonna be full porting the hell out of my account. All right, we are in. We have entered about 40 contracts right there, right? Just about 40 contracts you can see right here. Nothing too big, right? You might think that, oh, bro, that's a lot of money. Well, if you think in the orders of magnitude, right? It's like, it's a lot of money to you. But to me, I've been trading for 7 years. Like, of course, I will have like a larger account than you. Of course, I can actually risk 10K, 20K, 30K, 40K, 50K, even 100K on a trade, right? And it's still within my risk parameters, all because of the fact that I have a larger account than you. That's it. It's like, I see some of you guys like, oh my God, Brad, that's 30K. How do you risk 30K per trade, man? Bro, if your account have millions, I'm not saying that I do, right? But if your account got at least $1 million, 30K is only 3%. It's like, I want you guys to be paying attention to the risk per trade, right? Like that's all that matters. It's not about the profit, it's not about the loss, it's about the R multiple. Bro, look at this. The entry could not get better than this, guys. Futures traders, if you're watching this is how you trade futures, man. This is how you trade futures, bro. Look at that. That was like a perfect sniper entry. Right after we got in, price started, boom, price started going up just like crazy. Look at that. Okay, it was not like the perfect entry, right? The perfect entry would be entering like right here, right? But because I entered for like a manual buy order, entered somewhere around here, it still counts, all right? It still counts as a pretty decent entry. Man, look at this entry, bro. Oh my days. Oh my days. Futures traders, please, find me a futures trader that can snipe better entries like this. Like generally, this is what happens when you understand market mechanics, man. Oh my God. All right, I'm going to be targeting like this high right here. The thing is, like, it depends on where price goes, right? Holy shit, price just can't stop going up. Yo, I need to start trading more futures, man. The price action here is so much more smoother than bloody Forex. Man, I traded Forex because it was like a means to an end, right? Back when I was broke, then I have like no choice but to actually trade Forex since I had like $100 in my bank account and I have to leverage and I have to like do all this backflip to try to flip the $100 to $1,000. But now that I have serious money, I'm just been trading stocks, right? I've just been trading stocks, and in addition to that, I'm just wondering like, why am I still trading Forex? Like, it's like Forex such like a, I don't know, man. No offense to Forex traders, right? But Forex traders is like, it's such a brokey term, you know, coming from a Forex trader himself. But anyways, I think futures is like the next asset class that I'm going to be focusing more of my time, energy, attention towards, right? Because the price action here is so much more smoother, right? So much more smoother than Forex. Price is just about to pump, bro. Now, if you look at the 1 minute time frame right here, what do we have? We got price mitigating this supply right here. But then there is insufficient supply. Because if there's sufficient supply, what's going to happen is that there's going to be a lot of bearish momentum, a lot of selling pressure, causing price to come down and take out this low and continue going down even further. But if we start seeing like a bullish candlestick that is formed right here, right, where you actually take out this high and even take out this previous fractal high right here, this means that there is a market shift. This means that there is a failed reaction. This means that demand has officially overpowered supply, right? So price is gonna like start pushing to the upside. So right now I'm just waiting for that to happen, because once that happens, it's like all hell break loose. Like I'm just waiting for that beautiful U shape to form, right? You just need to get a U shape form right here. And to make it even more like obvious, let me just draw the supply right here. And you can see the fractal market shift has started to happen, right? But bear in mind that this could also be a liquidity sweep for price to actually go down even further. It depends on, once again, how many sellers and how many buyers are in the market, right? The objective of a professional trader is to understand who is in control of price at any point of time, right? Is it the bulls? Is it the bears? So right now, if I'm looking at this right now the bears are still in control of price, okay? But if price were to take out this high here, this will tell us that the bulls have took back control of price, at least in the short term, which means the internal structure can start shifting bullish, right? Which means that there's a very high chance that price will come up here, right? At least to this next supply. And then if price take out that next supply, then we are officially bullish on the higher time frame, and we can expect price to take out this swing high that we have right here on the left hand side. Like I said, there is still going to be some form of selling pressure at this supply zone, right? But it's whether this candlestick close bearish or bullish that will kind of determine what price does over the next few hours, right? If this candlestick start closing bullish, then we're potentially going to head up, right? But yeah, this is the last time that the sellers are trying to like cause price to go down even further, right? This is like them pulling the rope in a tug of war, but then now they're struggling, they're struggling. The bulls are like just getting stronger and stronger, like just pulling back just like this. And then the bears are like struggling right now. And then as the bears start to struggle, they start to lose momentum, they start to lose selling pressure. What's going to happen is that we're going to get this, right? Trust me, bro. Trust me, futures traders, please. If you're watching this, trust me. I've been trading for 7 years, right? This is not me pulling this shit out of my ass, right? I've seen this pattern play out so many damn times. Like I said, as long as price does not take out this low here, we are bullish. If this candlestick take out this low here, then it depends on whether this candlestick close below it. If it close below this low here, then there's a chance that we are shifting bearish. If not, yeah, we are just hella bullish, man. Oh, it's about to happen. It's about to happen. You know what's happening right here? Right, what's happening is that price is pretty much coming down here to mitigate this extreme zone right here, right? This entire extreme zone right here. This is the extreme demand zone that led to the fractal market shift right there. Right, and then there is also cute little fractal demand right here. Right, so either one of this demand zone is gonna cause price to start shifting bullish. So yeah, if it's not this one right here, then it's gonna be this one here. Okay, look at this. Right, look at this magic, guys. And then this is the last low, right? So if I'm looking at the internal structure, this is the last low, and then this is the last high that we are trading within right now. Okay, since we got like a fractal market shift right here, which was the first confirmation that tells us that potentially price is shifting bullish. And then next we got price mitigating supply right here, giving us like a potential failed reaction. The failed reaction haven't been formed yet, right? I need to see that U shape. Okay, so until we get the U shape, there is still no failed reaction. But right now, based on what the price is doing at the moment, there's a very high chance that there will be a failed reaction because of the fact that if price wanted to go down after mitigating this supply zone, it will just straight away go down. It wouldn't move so slowly just like this, right? If it's moving so slowly just like this, which means that there's a very high chance that they just don't have enough selling pressure, right? They just don't have enough selling momentum. And as a result, price just wants to mitigate like the next demand that we have within this extreme point of interest, get some buyers to come in to the market, and then we're going to pump, right? Trust me, guys. Oh my God, I sound like an annoying prick right now. Look at this. Oh, trust me. I totally sound like an insurance agent, man. But yeah, that's how much conviction I have in my analysis. Bro, just look. Like, I'm never going to say anything. Just look at what price does next. This is ultimate precision, right? This is me kind of like predicting what the market is going to do next on the lower time frame, which is so unpredictable, right? But yeah, the edge is in understanding market mechanics. That's the edge. We just need more demand to step into the market to cause price to take out this high. Once it take out this high here, then we are officially bullish on the lower time frame. And we are just going to pump like crazy, right? It's going to skyrocket like crazy. So just purely waiting for price to take out that high right here. Okay, so just being very patient right now, not doing anything, not flipping around and all that shit. But yeah, you can see what happened was that price came down, mitigate this previous demand that we have right here. This entire thing, I will classify this as an extreme demand zone, right? So price come down, mitigate the extreme demand. Right now, finding its fit right here. And then the bulls are hopping onto the market right now, starting to overwhelm the sellers. Selling pressure is going to be gone, right? Judging by how small the candlesticks are getting right here. And then now the bulls is starting to overwhelm the sellers. And right now they're still playing the tug of war. And you can see the bears are losing, right? And then the bulls are starting to win the tug of war, right? You can see. This is how I figure out who is in control of price, right? By using all of the market mechanics concepts, by using all of these confluences to actually back up my trade idea, right? So look at this. What did I tell you guys? What did I tell you? Like, I literally can't be more precise than this. This is not bar replay. This is not cherry pick charts. No, this is live market conditions. Look at this. 0050, live market conditions, man. Look at that extreme accuracy, baby. Right now, if I go back up to the 5-minute time frame, you can see, like I said, this is the last bearish candle. If the next candle, right, is like a bullish candlestick just like this and it closed above this high here, it's pretty much green light that is telling us that price has officially shifted bullish, right? So you can see what this candlestick does. As long as this candlestick closes bullish, right, we are going to be bullish in the short term. We're going to be bullish for the next few hours at least. Boom! That's what I'm talking about. Price has finally broke out of this ugly little consolidation that was being created right here to the upside, right? After like so goddamn long, right? So I was like away from the charts, just working on adding more lessons for the 1% Club members. And I didn't even see that price was all the way up here. Let me see how much I'm up right now. Big man things, bruv. Now, what happened earlier on was that like price was like consolidating around here. And I told you guys that once price actually took out this high right here, price is going to explode to the upside. And you can see right after it took out the high, boom, started exploding to the upside. Because this is pretty much like an internal break of structure to validate this market shift, which confirmed to us that the internal structure has officially indeed shifted bullish, right? So I was right in terms of the direction, but I was wrong in terms of the timing. And I'm not afraid to admit it, right? I personally thought that price would just start doing this and just start going up, right? But the market can do anything it wants, right? The market is going to go at its own pace. I can't really dictate how fast or how slow the market will move, right? But eventually, price did burst to the upside. And right now, we are all the way up here. So I'm right, but I wasn't right in terms of the timeline, right? I wasn't right in terms of the duration it took to actually break out. Now, for this trade itself, this was a super duper aggressive scalp, right? So this is not really like a good swing trade because the contracts that I use for this is quite large, right? So I'm not really comfortable like holding it all the way up there. So I think for this trade, I'm just going to treat it more of like a scalp and just going to target the next 5-minute supply, right? Which is this right here, right? This nearest supply right here. Actually, no, this is the nearest supply right here. Okay, so once price reach this point of interest, we are out. Okay, so quick little scalp. No, I'm risking a lot of money on this trade, man. I really do not want to hold this all the way up there, man. Honestly, I'm shaking, guys. Dude, we're up about 46K right now, man. Like, this is one of like the biggest trades I've taken this year. Oh my god. Oh, dude, my heart is actually beating like really, really fast right now, man. Oh my god, this is a huge position. I didn't realize how huge the position was. But yeah, man, I've been trying to build up the courage to actually size up on my positions, right? To just start risking more money, go outside of my comfort zone, right? So that I can actually scale to 8 figures, right? I'm going to be the first trader with 8 figures in capital. Maybe not now, but in 10 years time, right? Maybe not in 10 years time, maybe in 50 years time. No, you know, I'm going to make it 10 years, right? Before the age of 30, I'm going to have a trading account, right? That is 10 mil. Or rather, I'm going to have a few trading accounts which adds up to 10 mil. That is my promise. I'll eventually get there, right? Before the age of 30. But anyways, yeah, right, I'm just trying to develop the courage to try to play in the major leagues, right? So really like risking more money right now instead of the usual 10K here and there, right? Because right now, the thing you must understand is that I have a little bit of profit buffer, right? Like since the start of this year, I've been making like 6 figures a month consistently, right? So there's this profit buffer that I can just use to risk more money. Now, does this mean that I'm risking like freaking 200% on my account? No, I'm not full porting my account, right? It's still within proper risk parameters, right? As long as you manage your risk well, you will still be good, right? I have this beautiful quote. Risk management is a love letter to your future self, and you are the only one that is responsible for delivering it. And like I always say, losses are the only constant in trading. Like no matter how good you get, no matter how big your account gets, you will always suffer losses. And if losses is a constant in trading, why don't you do everything you can to actually minimize your losses? Because when you start minimizing your losses, you automatically make more money because of the fact that your losses are always going to be small and then your profits are always going to be big, right? It's like, that is like the single most high leverage task that you can do as a trader. And so many people just ignore it and focus on entries and getting like the perfect sniper entry, when in reality, it does not freaking matter if you don't know how to manage your risk well, right? So yeah, risk management is a love letter to your future self. So if you love your future self enough, then be responsible for helping him by actually managing your risk, right? Ensuring that you don't risk more than 1% per trade. Now, for me nowadays, I try not to risk more than 10% on a trade. I will only risk more than 1% when I have some form of profit buffer, like I mentioned earlier, which means I've already made like 100K for the past few months, and now I got a little bit more profits to play with, and now I'm going to be more risk seeking, right? Because from time to time, you need to make sure that you are actually like more risky, right? Like in order to get outsized returns, you have to take outsized risks. And that's something that a lot of people like are afraid of. Well, if you're afraid to take the outsized risk, then you shouldn't be complaining about why you're not getting outsized returns. Why you're not hitting the 15R trades, the 20R trades. Why are you not making like big money? It's because you're not taking sufficient risk. And the thing about trading is that you have to be comfortable with losing money in order to make money, right? So it's like, if you want to make 20% returns, you need to make sure that you're risking more, but still ensuring that when you lose less, right? So it's like this paradox. It's like about finding the delicate balance between like not risking too much, but also risking just enough so they can get outsized returns. Which is why I think the single biggest mistake that traders and investors can make is not to have any portfolio where it's just focused on risky assets. Like for me personally, if I look at my entire portfolio, I got about 10% of it is just catered towards like risky assets. It's like crypto, you know, the more the volatile move. It's like a small portion of my capital, right? But if they play out, right, this small amount can 10x like in 10 years, 50 years, whatever, right? So it's like you need to have some form of skin in the game by having like a small amount of capital and just deploying to like more risky sort of setups, right? More volatile sort of setups. Once again, I'm not asking you to bet your life savings on a meme coin. I'm asking you to cater like a small portion of a paycheck and allocate it towards like risky setups, or rather like setups that will actually 10x, right? That you will miss otherwise if you are just trying to play it safe all the time. Because if you're always playing it safe, you know, always like just taking the comfortable route, then you will never ever go outside of the comfort zone, which means you will never ever get outsized returns, right? So remember, in order to get outsized returns, you need to take outsized risks. And if you're not willing to take outsized risks, you shouldn't be complaining about why you're not getting outsized returns. Oh my God. Bro, futures is actually crazy. Why have I been trading Forex this whole time? Bro, like this is my first time live trading futures right in front of you guys, right? Like right in front of you guys. And you can see how powerful market mechanics is. Like it applies to all asset class, not just Forex, but futures, stocks, crypto, and whatever they will trade. Bro, wow, we are just about to hit TP right now. Oh my days. Bro, I actually need to trade more NQ, bruv. NQ stands for nice cock. Bruh, nice cock. Alright, bruh. I'm done, bruh. I'm done, man. Just get me out of the position right now, man. Holy shit, man. This was such a beautiful trade. Look at this. There was no drawdown at all, man. Right after we entered for the trade, price just went straight to TP. Straight to the bicep. Oh my God. Actually insane. I'm actually insane, guys. I'm actually insane. I'm not gonna lie, man. You guys gotta give me the props for this. I'm actually insane, man. Okay, so right now price is potentially pulling back to this area right here, and then we can get the move to the upside again, and then that is where price will come all the way up to our TP. And the reason why price is not gonna respect this order block is because there is available liquidity sitting above it right here, right? So it's very easy for price to actually come up there, sweep the liquidity from this high right here before it can even have like a drastic pullback, right? So until price mitigate this zone, we should not be expecting a deep ass pullback whatsoever. If you look at the price delivery on the left hand side, you can see that there's a lot of imbalance in here, which also means that the pullback is going to be insane, right? Like price need to find balance again. And the next point of interest where I can find balance is probably somewhere around here, right? And just nice, around this point of interest, there is a bunch of available liquidity sitting at these highs near that point of interest as well, right? So right now, just being very patient, holding the trade to TP, not taking profits early, not letting my emotions suck me out of the trade whatsoever. And just remember, guys, the goal isn't to beat the market. The goal is to outlast yourself. If you can prevent yourself from clicking that exit button or like closing a profitable position early or rushing into a trade early, you're going to make a lot of money, right? It's just like your itchy fingers that is causing you to lose money, right? So if you can just outlast yourself, you know, just be chill, right? Smoke some weed. Just kidding. I do not smoke weed. I do not do drugs. I do not recommend you to do it. Don't ever do drugs, man. But just be zen, you know, meditate, right? Meditate, drink green tea, right? The natural remedy to trade just like bread, right? Just gotta be zen, man. Look at how zen I am right now. I'm actually not very zen, right? I'm actually very excited right now because like, man, it just feels so good, right? To actually prove to you guys that, like I said, man, market mechanics is universal across all asset classes. Like, I don't care what you trade. I've made 100K this year using market mechanics on stocks. I've made 100K a month using market mechanics on Forex. And now, I'm going to set a record right now and make 100K, my first 100K trading futures in the next 30 days or so. It applies. Have I made 100K trading crypto? No, not yet, right? But I've just recently gotten into crypto as well, right? But once I made 100K trading crypto, I'll let you know. All right, I'm going to go have my eggs, right, in my protein fix right now. And if we come back, better hit TV. Look at these eggs, man. 3 eggs a day keeps the soy boyness away. If you don't want to be a soy boy, eat 3 eggs a day. Mark my words, man. Like if you want to get sniper entries and you want to trade with precision and top tier accuracy, eat 3 eggs per day. Trust me, I've been doing it for like the past 7 years. So this is the secret right here. Eggs and tea. That's it. That's all you need to be zen and focus on the markets. Boom! Oh my god, price just absolutely demolished our TP. Let's see. I'm gonna close my position right now, guys. Boom! There we have it, guys. We are finally out of the position. Took quite some time, but we finally got there. What did I say, guys? I told you that price will just blast right through like this little point of interest that we have right here, even though it's considered as like an order block because of the fact that the market seeks liquidity and there is available liquidity above these highs, and the only point of interest that is near where price currently is that have a lot of supply is this one right here, right? So until price reach that area, it will not have like a huge amount of selling pressure whatsoever, and that is why I targeted right there. There we go. Futures, my man. Made about 77.9K today. Held the trade for around like 2 hours, right? So quick little intraday trade. So far, 100% win rate on futures, right? Not too shabby. Let's continue running it up, right? The only reason why it's 100% win rate is because I've only taken like 1 futures trade today. But not bad, huh? Not bad. So let me know down in the comments below if I should trade more futures, because I'm starting to get into futures, man. You know what? Maybe I should just trade futures full time from now on and just ditch Forex. Like save Forex for the old, unprofitable, broke bread. So if you guys want to see more futures trade, let me know, because man, I love futures, man. I love futures. Yes, sir. Yes, sir. Like I said, guys, this is what happened when you trust me, man. Just now, like I mentioned, I told you guys to trust me. I told you guys to trust me, and some of you guys don't trust me. And if you guys don't trust me, look at what happens. Right after we got out, price started reversing right at the supply zone, which I've indicated for you guys. I told you, man. I told you price was going to reverse right there, and you don't pay attention. I told you that price is going to create the breakout structure, and then price is going to explode right after that. And you don't pay attention. So the next time I ask you to trust me, just like a bloody insurance agent, you should trust me. That's it. Always please do your own due diligence, alright?